Oil prices are in retreat today after U.S. President Donald Trump said the war could end soon. Now, despite this, G7 energy ministers have been in talks to potentially release oil reserves. Here to break down the oil supply outlook is Matt Smith, lead oil analyst at Kpler. And Matt, thanks very much for joining us.
Thanks for having me.
So the G7, are they playing past the buck today, saying, "Hey, let's have the IEA take a look at this"?
I know it's interesting in itself, right? Just talking about doing some type of release. Now, we are all concerned about how long the Strait of Hormuz is going to be open. Could it be open another 1, 2, 3 weeks? Potentially, yes. But by the time you get some type of release done from the strategic reserves, the physical impact of that is going to take beyond that period, right? And so if it's the IEA or it's G7, whoever looks to make an announcement to release these reserves, it's going to have an impact on sentiment straight away. It's going to weigh on oil prices, but the actual physical impact of it is going to take weeks. And hopefully by that point, the Strait of Hormuz situation will be going some way to being resolved.
So could they, in theory, say, hey, we're going to do that, and then because everything gets resolved, they don't need to worry about releasing any of the reserves and they get to keep them? Would they be locked into having to release some?
I guess they would have to meet again to say, you know what, we're actually backpedaling on this. It's possible. But I don't know. Someone like Japan, I think it's very important to talk about this. When you talk about G7, Japan is absolutely key out of all those players in terms of how much Middle East crude it gets, right? It takes about 2 million barrels a day through the Middle East Gulf, through the Strait of Hormuz there. That is 90% of its total imports. And so Japan, more than anybody here, is key to look for these barrels to be released. Everybody else, all of these different countries are taking crude. Everyone is so reliant upon the Middle East, right? But they are potentially looking at this as more of a way to ease prices lower, as opposed to them getting their hands on this supply.
And does the fact the oil prices, it's plunging today, really? I mean, after that wild ride up on it was only yesterday. After that wild ride up, it's now back down to $80. Is that going to be a factor with the G7 and with the IEA?
I think we're just in this absolute volatile time now, right? And so we're moving on headlines. There's talk, there's potentially a U.S. tanker that has been able to get through the Strait of Hormuz with an envoy. That's why we're apparently dropping right at this moment. I saw that like a minute before we came on here. But we're just moving so much on headlines here that I think the broader picture here is we have to take a step back, look at the Strait of Hormuz, see how much passes through there and see how much has been halted, and look at this realistically and say, look, this situation, even if it was resolved right now, is going to take time for these barrels to come back through the market, get past and through this choke point. And so, even if it was resolved today, it's still going to take time, let alone if it goes on for 1, 2, 3 weeks from here.
And Saudi Arabia, they're trying to shift oil to go north. Is that just precautionary, or is that a sign of things to come?
You know what? It's for one of two reasons, it seems, right? So one is there's just ultimate caution, but really it looks as if they're doing it because they're concerned this is going to go on for weeks here. And the reason I say that is because we're looking at these future arrivals of these tankers, and they are scheduled up until the end of March into April here. And so what is happening is you have an east-west pipeline that takes the crude from being in the Mid-East Gulf, where they typically load from, across to Yanbu in the Red Sea there. And so typically we don't see more than 750,000 barrels a day being exported from Yanbu. But now we're up over a couple of million barrels per day, and we're looking at getting up to over 4 million barrels a day for this month. And so that suggests that Saudi Arabia thinks this is a longer term problem and not a quick fix.
And what's kind of faded over the last few days is the natural gas. What's going on with that right now?
The problem is still there, right? So you have Qatar that exports 20% of the world's liquefied natural gas. That isn't leaving. They have had to shut down production. They have also released that it's going to take a good number of weeks for them to ramp back up again. So that natural gas issue is not going to be going away anytime soon. That Qatari natural gas does not go into Europe. However, you are seeing cargoes being diverted from the US away from Europe to Asia because there's simply that pull because Asia is now missing 20% of LNG flows from the global market.
And are there other other providers that can make up for that 20%, or is it vital?
It's vital. So the US has basically become the swing supplier now. You have like three players, Australia, Qatar, and the US, which account for 60%, something like that, of all global exports. Australia is already sending to Asia, so therefore the US becomes the swing supplier, and because of that, Europe is price is so high because it wants to hold on to that LNG. That is the concern, whereas Asia is bidding it up to take it away from them.
And then I guess the one other kind of wild card, we heard Trump talking about Russia being allowed to do some deliveries possibly to India. What does that mean?
India needs it more than most people, right? And so when you look at India, India imports about 5 million barrels a day. Half of that comes from the Mideast Gulf through the Strait of Hormuz. India also has very little in onshore storage. And so it has about 100 million barrels, which is 20 days cover. That is super small. And so the Indians are basically panicking here. And so the ability for them to be able to buy Russian crude now, whether it's on a waiver for 30 days or otherwise, is a huge boon to them. That said, that isn't going to fulfill the full gap that is being left by the loss of the Middle East barrels going in there.
Okay, Matt, we'll wrap it up there, but thank you very much for joining us.
Appreciate it. Thank you.
Matt Smith is the lead oil analyst at Kpler.